Okay, so yesterday we learned about closing our temporary accounts, right? So we closed revenue to income summary. We closed expenses to income summary. We closed income summary to capital. We closed drawings to capital. We did those 4 steps and we recorded it in the general journal. The way you close an account is you do the opposite to what is there. So if revenue has a credit balance, you debit it to close it off. Okay, and we recorded it in the general journal. What we're going to do today is we're going to do the exact same thing, but we're going to do it in the ledger instead of the journal. That's the only difference. So, a couple things to keep in mind. So make sure that the total debits equal the total credits in the journal before you post to the ledger. Okay. Number 2, the ledger holds all the accounts for the business, so it's easy to see how much money is in each account. After posting, revenue, expenses, drawings, and income summary will all have a 0 balance because those are your temporary accounts. Okay, so revenue, expenses, drawings, and income summary will all be shut down. And then finally, the capital account will have a new balance because remember the net income, the income summary, and the drawings screws around with that balance. So this is what we did yesterday. So yesterday, we closed the revenue. So the revenue were debited, income summary got credited. Notice debits equal credits. Okay. Then we closed our expenses. So the expenses got credited, income summary got debited. Again, debits equal credits. Okay. Then we closed income summary. So how you do this is you can see that income summary has a credit of 6565 and a debit of 700. So I have to debit 5865 because that has to total that, right? Because I have to close them off. So if I am debiting income summary, then I am going to credit capital. So again, debits equal credits. And then finally, you close drawings. So drawings gets credited, capital gets debited. That's what you learned how to do yesterday. What we're going to do today is we're going to take this and put it into the ledgers. So the notes look way longer than what they are, but that's just because I had to photocopy each of the ledgers so you could see how it works. Okay? So if we just go through this. So my 2 revenue accounts need to be debited. So I'm going to flip my page. So here's all my accounts. So here's the owner's equity ledger. If I flip, here's the revenue. So this balance is 4675, this balance is 1890, and it is a credit balance. Okay? So you are going to debit 4675 and 1890. Now, notice we are on page 22. Okay? So I am going to write in G22 under the revenue. So right now it's a credit balance of 4675, so I am going to debit 4675. So that makes it a 0 balance. I'm essentially just copying what I did on the general journal. So the general journal is a debit 4675, a debit 1890. So debit 1890. And it's page 22. So now this balance is 0. The other part was income summary is going to have a credit of 6565. So I need to find my income summary account. right here, I'm going to have a credit of 65.65, like that. And it's again G22. Okay, and I don't know what date we're on. I don't care about the date. Put whatever date you want. Okay. Next one. I have to debit income summary 700. So debit 700. Now, that still means I have a credit balance. But because these are in opposite columns, you're going to subtract them. So 65.65 minus 700 is that 58.65. Okay. And then the other part of the transaction was all the expenses got credited. And again, I'm doing that to make them equal 0. So all of my expenses, so here's my expense ledgers, all of them are going to get credited. So I'm going to credit 75, G22, credit 250, credit 125, and credit 250. Like that. So I'm just literally copying my general journal into my general ledger. Okay. Okay, next one, income summary is going to be debited 58.65. Thank you, you're done. Okay, so income summary gets debited 58.65. So income summary is debited 58.65. Now notice, this is now 65.65. This is 65.65. There's that 0 balance. And then the other half of the transaction was capital gets credited 58.65. So capital gets credited 58.65. Now, because this is a credit balance and I am crediting another 58.65, you're going to add those two numbers together, right? If this is credit and you're doing another credit, you're going to add 58, 59. I'm not even going to try. 63.65. Okay. One more. We're going to debit capital 1,050. So debit capital 1,050. So again, because I'm debiting, I'm now going to minus that number. Now, is 63.65 bigger than 1,050? Yes. So the balance will still be a credit balance because this number is bigger than that. But to calculate it, I have to minus off that 1,050. So we get 53.50. And then the other part of the transaction was drawings gets debited. Or sorry, drawings gets credited. So right now drawings has a debit of 1,050. So I'm going to credit 1,050. So that gives us a 0 balance. So once you're done, excuse me, once you're done, drawings will be 0, income summary will be 0, revenues will be 0, expenses will be 0, capital will be changed, not 0. Okay, so this is new. Everything else will be zeros. Okay, so that's that piece. Now, there is one final part to this. I'm looking for it here. Okay. And the final piece is what's called a post-closing trial balance. Okay, so just skipping your notes to find that is the post-closing trial balance. All this contains is your permanent accounts. So your assets, liabilities, and capital. That's it. So your post-closing trial balance, all your temporary accounts have been closed. So all you have left is your main. So if we go back, where is it? Oh, because I didn't bother copying it. So did I put the answer in your notes? I did. No, I didn't. So I would have to provide you with the original balance sheet. Okay, so the post-closing trial balance, you just want to have all of your assets on here. Okay, so those are your original assets, and they all have a debit balance. You want to have your original liabilities, and your original liabilities all have a credit balance, and your changed capital. Your changed capital, that new balance, and again, it is a credit. So that 5315, that is what we calculated right here, 5315. Now, if you have done it right, your debits and credits will be equal. So on this post-closing trial balance, that's the name of it, it only contains the assets, the liabilities, and the new capital balance. These have not been changed because you didn't close them out. You haven't done anything. This is the only one that's changed based on those changing of accounts that we just did from yesterday. You'll know if you've done it right if those two add up to the same number. Okay, so that is everything. So I put another example on here. Do you need to see another example? Are you okay with that? So just like I said from yesterday, so you're going to be given this. So yesterday you had to create this. Today I'm going to give it to you. So what you're doing today is you're taking this and transferring it onto the ledgers. Okay. You'll know if you've done it right. If the capital is changed, drawings will be 0. Income summary will be 0. Revenue and expenses will all be 0. So if you have taken this information and put it into the ledgers correctly, capital will be a new number, but everything else, revenues and expenses, will all be 0. Assets and liabilities do not get touched because those are what we call our permanent accounts. So leave them alone. Once you're done closing everything off, you are going to do a post-closing trial balance. Your assets will all have numbers in the debit column. Your liabilities will all have numbers in the credit column. Your capital will be a new number in the credit column. You'll know if you've done it right if they are equal. Okay? So just to pull up the Google Classroom for you. So this is number 8. So day 8. Here is the assignment. Okay, so just scroll down. So, oh, I didn't put it on there. Here we go. So you're going to open up the journal. So here's the closing entries. Okay, you're going to take those journal entries and you're going to put them into the ledger. Now, the ledger has the assets, liabilities, owner's equity, revenues, and expenses. I had to include the assets, liabilities so that when you do your post-closing trial balance, you have those assets and liabilities, you have their balances. Okay, but in terms of closing stuff off, whoops, in terms of closing stuff off, you're only using the expenses, the revenue, and here the drawings, and then the income summary is just at the bottom of the page. I just can't scroll to it. Okay? So you are going to share with me, so you have to email me the new ledger and you email me your post-closing trial balance. You do not email me this because you're not doing anything to this. This is just what you're going to look at. Okay? So for the remaining time today, you've got work time, and tomorrow is a work day as well. So I'm not going on now until Monday next week. Okay? Alrighty, I'll meet you down at the lab.